Welcome to the Infomullet YouTube channel. If you enjoy this content, please like or share. And if you'd like to support the Infomullet by becoming a mulleteer, visit us on Patreon. We appreciate your support. There's a stock market question. Someone was going to ask it. Some investor out there is going to say, hey, where's the stock market going to be at the end of next year relative to where it is now? Now, with the caveat being, it's not the end of the year. I predicted that the New York Stock Exchange would be higher at the end of this year than it was at the start of the year. And as of today, December 2nd, it is 1.8% higher. So I have met the forecast, but all my contingencies, most of my contingencies got activated. I said contingencies that could hurt this would be exogenous. And I didn't predict the pandemic virus as an exogenous, but I did say drastic measures in the Chinese trade war, major stoppage of key oil commodities, the price swing war that occurred between Russia and Saudi Arabia. March, April, I think qualifies for this. It was a commodity shock to the system. It really disrupted the system with commodities, or a sharp recession, which we've had a sharp recession bordering on depression. I also indicated in the forecast that if we have a sharp recession, it will cost Trump the White House. So I feel pretty good about this forecast. I was both right in the overall forecast and also right in all the contingencies of what could go wrong. Now, how is that possible? How can we have all this economic harm and stock exchanges are still doing high? You got to understand the stock exchange is only trading the value of what people perceive as little slips of paper, physical or virtual, which is a share. It has almost no connection to the underlying economy, and people get really wrapped around the axle. And if they're investing, they get in a lot of trouble if they don't remember that all the stock exchange reflects is how people value these little slips of paper that are roughly related to a company. They're not even in control of a company anymore, and how they're going to grow in the future. It's not, I would not use stock exchanges either as a gauge of presidential success or failure or as a gauge of the underlying economy. And this was a trend that started with under President Obama. Everyone would say, the stock market's up. President Obama is doing great. And I'm like, that's not how it works. You cannot attribute a stock market value to a presidential action or a president, because of course Trump went in office and the stock market continued to go up. And Trump's like, yeah, I'm great. The stock, if you look at it, there's a trend going up from the last crash that's been continuous right up until we hit the pandemic crash. So it's one of those things. Stock markets reflect the supply and demand and the pricing of little slips of paper that are virtual or physical, and that's it. Don't overthink the stock market as a good proxy for the overall economy. It's not, and it will not react. It's looking at future expectations. Thanks for watching the video. Hope you enjoyed it. If you'd like to follow the Infomullet, visit us on Facebook or Twitter. And if you'd like notifications when we post new video content, click on the red subscribe button below the video. If you've ever wanted to become a mulleteer and support the Infomullet, visit us on Patreon. We appreciate the support.